Everyone, Sean Maloney, Digital Business Masters, special DBM strategy call today on Paddy's Day. Uh, all over the world. We have lots and lots of paddies all over the world and one myself. So today, no doubt, we'll have a pint of Guinness at some point today. So happy Paddy's Day to those it may concern. Usual strategy updates from us at DBM, 12 p.m. UTC every single Monday. We've done these all the way through 2025 and we'll continue to do so. There's a huge amount going on that now puts us dead center in the money supply, what we've always wanted. And if you are owning gold, physical gold that is, and you own Bitcoin, you very much now put yourself at the center of the money supply. Now what we need to do is consolidate and push through. If you participated in any level of cash flowing during the process of accumulating your balance sheet, then that also needs to be taken seriously. And you just need to manage it. You just need to manage through the suppliers, all the things that go on as we look to find ways to create cash flow from our digital assets. Yeah, it's not ever going to be a straight line. Everybody wants everything quick and easy, press button fast, but it doesn't work like that. You need to go through the process and keep working your business, keep managing your factory, keep looking after your machines, even if it is frustrating. So the idea of the strategy call is to put yourself above the canopy, see the big picture, and then at the second part of the call that you'll find over in the Systems Hub inside the DBM Academy. You'll see the link below for that if you're watching this on YouTube or if you're watching this on the open channels of DBM. Press the link, you go to the system subscription and get into the System Hub to see the second part of this call, which talks about the practicalities of converting digital assets into cash flow. And it's from that cash flow that you're able to create an income. In other words, you pay yourself. The rest of it goes into running your business. And as digital assets appreciate and accumulate and appreciate and accumulate, you get to critical mass, and that enables you to create more income for yourself. So very much two parts to this call. The first part, of course, is the big headline thing. So if it's the first time you've listened to this, you're welcome. If you're part of our YouTube family, hit us a bell there, hit us a like. We want to get over that 1,000 subscribers again. We reset the whole YouTube channel about a year ago. We now want to get back to that 1,000 subscribers. So please help us out to get the algorithm where we need it to be, and more people will be able to hear this information. So who are we? Well, we're simply a volunteer army of people who work together all over the world, connected together under one digital business masters model. We built this model over the last decade or so, understanding what it takes to own sound money, understanding what it is to be at the center of the money supply. And lo and behold, by 2025 now, we've found ourselves in that place. And in that, we now look to consolidate and capitalize on using things like Bitcoin to create an ability for a balance sheet to self-fulfill a cash flowing business system. Yeah. So we've got it all set. We know it works. It's just a case of managing it and helping enough people who predominantly come from the retail end of the spectrum. It's giving the people support, giving the people the fortitude, the skills, the mindset that it takes to convert a startup, which is what most people do. It's a startup, to convert a startup into a fully fledged, strong business. And that takes a lot of doing. Of course it does. It takes a lot of mindset, it takes a lot of skills, it takes a lot of system management. But when you get into the momentum behind it, which is powered predominantly by Bitcoin, you're then able to convert that into a very, very good lifestyle. Indeed, if you so choose. The question for most people, of course, have they got the fortitude and the patience and the skills to do that in their own lives? That's the question that most people end up asking themselves. And our job at DBM as an academy is to help that process along. We're certainly not here to give you any financial advice. That's not our job. We're not interested in financial advice. We're interested in always seeking financial education. And once you get the education, you're then able to move forward under your own steam, using all the tailwinds that come along as bosses, banks, and governments have now finally realized that they're going to need to operate themselves on globally interconnected sound money. And that's happened this last 12 months. Bosses, banks, and governments are starting to figure that out. We'll talk about that a bit more during this next few minutes. So what have we done? Well, we've used all the time we've had to accumulate strong balance sheets based on gold and Bitcoin. And then we've looked at it and said, okay, well, that's fine. So equity is great. Collateralization is fantastic. We can obviously leverage that to create ongoing capital, which then we have an obligation to put to work. Now, you can put that to work in hundreds of thousands of different ways, of course, in business. In digital business, we get the privilege to identify and connect with and build relationships with any number of suppliers we wish to across any number of different industry sectors. And we do that through the privilege of our own laptops based on the internet with the interconnectivity and the communications age. So then it's a case of almost being spoilt for choice. And you've really got to work hard on building the relationships, making sure you're working with the best projects you can find, which isn't easy, of course. And then once you do make a decision to get involved, your job is to stay the course, finish the job, and most of all, support the company or companies or industry sector that you decided to get involved with. Support them. What do we find in the retail space, unfortunately? Because barriers to entry are so low, we find people jumping in, very, very excited, and then not having the resilience and the fortitude to finish. Hence, we set up a big part of the reason we set the academy up 5 years ago. Because we recognize that people need support in what it takes to go from a startup and an idea and a dream and convert that into a fully fledged balance sheet that drives cash flow into your business every single second, every single minute of the day, which is, when you're working well in this industry, exactly how it works. Now, does it always work perfectly? Absolutely not. Absolutely not. Why would it? But the whole idea is to make sure that you understand that there's a much bigger play going on than just press button, money fast, everything's going to be perfect. If you want that life, stay employed. If you want to be a business owner on the right-hand side of the cash flow quadrant, and most of all, if you want to be an investor, you better understand that it isn't easy. So we've selected upwards of 14 different industries here over the last 15 years or so. It's been a case of us identifying them and working with them, and we dip in and out all the time. It just depends on where the technology is headed. Okay, it's become a lot easier for us over this past few months, literally, because finally the bosses, banks and governments and three-letter institutions such as the SEC are starting to realize that this is how the world works going forward. It's called tokenization. Everybody owns a little piece of everything. We co-wrote a book on this back in 2022 called Collaboration. It was a vision then, and now it's a reality. Anybody with an internet connection can own a little piece of as many companies as they want, and then help that company become a success so that you end up with equity in the coin price, and you can convert that equity into cash flow. So we work with lots and lots of different industries. If you want to understand more about this and how all these connect in real life, then watch the second part of this video. You'll see the link below over in the Systems Hub of the DBM Academy. To get into that Systems Hub, which is where we recommend you start, at the least you need to be in the Systems subscription, because that's going to get you into the hub, that's going to get you into all the forums, that's going to get you into the recordings, that's going to get you into all the detail of working with the globally interconnected coaches that we have as a team all over the world that we've developed. You can't buy these types of skills, you can't buy these types of people. You wouldn't be able to afford them if you wanted to employ them. These are very special individuals who are walking the walk and have done a lot of the things I'm talking about to you in the past 10 minutes. It's an incredible skill to have. Got to respect that and understand that access to that type of skill is expensive. We try and make it as affordable as possible because our focus remains on ordinary people. That's what our focus still remains even to this day. And we want to make that as affordable as possible so people can invest in themselves to get access to what it takes to do all the things I've just said. Okay, so this is what you've got, but I'd encourage you to at least be at Systems if you're interested in learning more about what we're going to be doing now, which is to convert all the necessary practical steps to convert strategy into cash flow, yeah, and figure out how to do that and what's working when. Not everything works at the same time. Some projects are working for a time, then they'll maybe step back a little bit, and other projects will pop up. You then reallocate to that project, and when that project starts to do what it does, going through its own cycles, and another project comes back in, you move into that project. You're constantly moving your balance sheet between cash flowing entities. That's called diversification. Why do we do that? Well, because we understand implicitly that what you don't do is spend time and skill for 40 years of your existence and just try and earn currency enough to buy liabilities. Those days are long gone. In fact, they're rapidly diminishing now because of something called AI. There'll be a huge number of job losses going on over the past decade and over the next decade. And if you've got 20 somethings, you've got Gen Zs and Gen millennials in your households and in your reach, you know, kids and grandkids, just watch what's going on in their mindset. I live in the UK, and 22% of the population is currently either out of work or refusing to work. They're blaming a lot of that on COVID. They're blaming a lot of that on lethargy. They're blaming a lot of that on people just realizing they just cannot get ahead earning currency. Yeah, we know. It's been the case since 1971. What people have borrowed the way all the way through. Yeah, even if you're a baby boomer, even if you're a Gen X, you've just borrowed your way through life. And now you get into a time of life where you're thinking, well, I can't carry on doing that because I've not got access to that credit anymore. My house isn't worth what I thought it was going to be worth. Things are more expensive than ever before, and I just can't bring enough income in to do what I need to do. Yeah, we know. And that's all the way through society now. And it's going to get even worse as we walk into AI. But in the same breath, it's massive opportunity, absolutely huge opportunity for people who are determined to plug in to the fact that you don't go out there and simply interchange skill and time for currency. You put skill and time into learning what it takes to own companies. And it's those very same companies, they're going to be using the AI, they're going to be using blockchain. They're now already starting to use Bitcoin. So where should you be? Do you think you should be owning those companies, all of which I just showed you there on the 14 different industries we work with? Do you think you should be earning your income from the interface of what happens in globally connected blockchain Web 3.0? Do you think that might be an idea? Well, that's what it is to own assets that cash flow. So the idea is you put the same amount of skill and time into something. And if you work at a job today and you need to work a job, absolutely, of course you do. You need to start thinking about proportions of the time going into learning other skills and creating new mindsets and having the ability to convert some of the devaluing currency that you've been working for all your life into highly valued assets. The main one obviously being Bitcoin, which is accretive. And then you use that accretion, you use the equity to push into cash flowing asset systems. And you use that to fund liabilities, fund them. It's a very, very special skill that is so obvious it's not funny. But you're not taught this stuff. You're simply not taught this stuff. So the least we can do is teach our kids, the next generations who are now incredibly lethargic about what it takes to get out of bed and actually go to work. So there's 3 levels in basic terms. The big one, of course, anybody who's unless you've been under a rock for the past decade, you'll have seen the appreciation of Bitcoin as an underlying asset. There's a reason for that. And still, billions of people in the world just do not understand it. They just do not understand. It's not about it being Bitcoin. It's about it being sound money. And there's certain things that sound money has to have, there's certain properties it has to have, and Bitcoin has them all. So the appreciation we've seen on that asset over time, over a long period of time now, knocking on 12, 14 years, gives us the ability to be able to say, okay, well, that has precedence now, that has pedigree. And we were doing this for a decade, more than a decade. And then all of a sudden, and it has been relatively all of a sudden, the governments and the bosses in the banks start to take interest in it. We'll talk about that in a minute. And now look at what's happening, right? Now look at what's happening. So all of a sudden, we're in front of, or front running, what's going on with global politics, with global macroeconomics, with global institutions. If you've been involved with this industry even just for a couple of years, you'll know that that is an absolute breath of fresh air that's given us the ability now to really strategize about where we're going to go next. So what are we doing next? Well, obviously, like I say, you can't run a business off a balance sheet. You need to put your assets to work. So we're constantly trying to find ways, and most of all, manage the ways that we've decided to work on, so that we get to a point where we're able to convert what's called yield. So equity is one thing, but yield is necessary as well, obviously, because you want to be getting cash flows. You want to be gaining. You don't want to sell the asset to create the income. You want to put the asset to work to create the yield, to create the income. And we do that with USDT, USDC based projects, anywhere from 5 to 12% a month. Yeah. Now, do these projects sit still? No. Are they constantly moving around? Yes. Do we have to make sure we're diversified across several different versions of this model to keep our cash flows under control? Absolutely. Yeah. And it will drive you nuts. It will. But it's just like running a machine in a factory, just like running a factory. Any of you that have run factories, I spent 25 years running factories personally. Every morning I'd walk in at 6 a.m. expecting a problem. Every single morning. It's just the way it is. Now, can people take that attrition and mindset? No, most people can't take it. It's just facts. That's why they have a job. But if you want to be successful in this industry, you have to work through it. And it's much easier to do that when you're working together with other people who are working through it with you. Hence, we have the academy. Then you can take it even further and combine equity plus yield with what are called altcoins. So you can own a token that's appreciating, it's accretive because of its nature, which is reduced supply, just like Bitcoin, and increased demand, just like Bitcoin. But in altcoin world, you can also yield. You can't yield for Bitcoin. How do you do that? Well, because you assign the coin to liquidity pools, for example. There's plenty of ways we do it, but liquidity pools are the most powerful. And as more and more and more and more people recognize what it is to own privately an asset base that yields, it puts more and more demand on the actual asset. So this is absolutely clear as day. Well practiced, well worked, well run. You know, we do this every single day of the working week. Some people might do it 7 days a week, especially when you're getting started. But the whole idea is for you to map all this out and see where you're at with any given project or asset you've decided to participate in. And the thing about mapping it out, which is what we call cash flow planners, means you can see the wood for the trees, which enables you then to duck and weave is what it takes to keep your factory balanced as machines come and go and change and adjust. Because we're all doing that together, then we can all be safer together as we work our businesses to critical mass. Another version of it is the tailwinds. These are big macro tailwinds, big government tailwinds, institutional tailwinds, huge tailwinds that simply put more value on our main asset, of course, which is Bitcoin. And then we drive that through what's called collateralization. That has very, very positive taxation implications, by the way. We're then able to take that working capital from that collateral and place it into any given combination of projects that yield through USDT or yield plus equity through altcoins. And we just constantly adjust our business to try and hold our income stable no matter what's going on with the ebbs and flows. Simple, right? Work together with the coaches, work together with each other to maintain that. And when things get difficult and when things go a little bit dry, that's the time to really study on what you're going to be doing as things reappear again, which they always do. Because you're going to make sure they do, aren't you? You're going to make sure that whatever happens, you're looking at the next thing, the next thing, the next thing. Where's the technology going? What's coming through regulation and legislation? Where's the obvious companies now that are starting to use crowdfund 2.0, globally generated capital raises from individuals on the internet? Where are people going next? What's working next? That's why we have 14 different industries we work with. Because we're always looking and expecting the next problem, but we never want our cash flow to be affected, ever. 80-20 principle, okay? If you don't know what that is, Pareto's law, go and look it up. And always move back. Put your business first. Your lifestyle comes second, not the other way around. It's not a job, this. You're not earning income to go and spend your life. You're creating income to reallocate big proportions of that back to your business to build up to a level where you can live your life. Very different mindset. Cash Flow Quadrant, Robert Kiyosaki. Make sure you read that book. Okay, so big picture stuff for this week. Again, just to remind everybody, it's about being as close to the money supply as you possibly can get. Yeah, for years and years, for all our lifetimes, it's been impossible to get close to the money supply because of the nature of central banking and government and banks and shareholders and pensions and business, right? You can't go and print your own currency. It's illegal. But the Fed can, the Bank of England can, the European Bank can. In fact, they're doing it right now, again. But what we can do, and as we've done for years, is we can own gold. Go and have a look at the chart, have a look at what gold's price was just 7 years ago. You'll find that it's doubled in its relative value in currency, in dollars. Why has that happened? Well, I'll tell you now, it's not because gold's more expensive. It's the toga and the suit. So if you've now just created a situation in your life because you own physical gold where you protected purchasing power 7 years ago, things weren't priced the way they are today in everyday purchases. They were cheaper in real terms. Gold is now twice as valuable as it was 7 years ago. But prices have also increased. So all you've done really is protect purchasing power. You're not wealthier in that sense, which is why so many people struggle when they go through 40, 50 years of existence, chasing currency, hoping something will happen as they get to a point where they've run out of energy. And then they wonder why they can't live the lifestyle they thought they were going to lead when they were thinking about their lifestyle 30 years ago. It's because there's no purchasing power left. That's why we own gold. It protects it. So when you do need that purchasing power in the future, it's been frozen in time. And therefore, if you want, you can sell it. But those days of even that is now outdated because of Bitcoin. Digital gold came along in 2009. Now we don't need to worry about selling any assets. We can protect our purchasing power. In fact, we can accelerate way past inflation. Many of us have done that owning Bitcoin over the past decade. And now we're able to reallocate that, in other words, collateralize it. It pays for itself, basically. Your balance sheet perpetually funds itself. Yeah. Now you can't quite make a living off that unless you've got huge amounts of Bitcoin. So what you have to do is obviously put that balance sheet to work in the ways I've just been talking about for the past 15 minutes. You need to find cash flows. But what you're doing all along by owning gold and Bitcoin is you basically put yourself right at the center of the money supply. Why? Well, again, in case you were under a rock, the governments, the central banks, and the institutions have just started to align putting Bitcoin on their reserves. First time in human history that we're able to work alongside these big institutions because of the globally interconnected availability of Bitcoin itself. I understand we've been able to own gold privately for decades, yeah, but it's been manipulated, heavily manipulated by things called ETFs. The same may well happen to Bitcoin, and arguably is happening already. But the pace with which the Bitcoin business model given to us by Satoshi works is that the supply reduction is so aggressive and demand is so aggressive that it moves much, much faster than gold. And it's not a physical form, therefore it exists on the internet, therefore it's accessible by everybody at any time. That is not the case for physical gold. So there's some very, very fundamental differences with regards to Bitcoin being the center of the money supply. And now we're able to front run it. And it's never been therefore more important to own a piece of the money supply as you move your business forward. In other words, it's an accelerator to you being able to drive your balance sheet faster so that you can do more things when you've got the skills and the mindset and the capabilities to put that equity to work in as many different ways as we can possibly find with each other. Yeah, and we're just at the foothills of that process over the past few years. So, big picture, when it comes to trying to get ahead and continuing to stay ahead, which is where we're at now, there's certain economic factors that we do need to keep in close consideration when it comes to our future decision making. You always need to be working your business 3 to 6 months into the future. You'll hear me talk about that more in the second half of this call, where I talk about how we're preparing for all sorts of different things when it comes to what we're going to do with price discovery. Where's that price discovery come from? Well, it's coming from what's going on with the big decisions now being made that are spewing at us from all angles. Yeah, all over the place. If you're not following DBM on X, then make sure you do follow us over there on X, because this is where we push this information out in real time as every day transpires. And it's a lot of this information here has come from that source. So Bitcoin plus stable coins plus capital markets, Abu Dhabi, $2 billion into Binance. Binance has 260 million users. Okay, quite extraordinary. They've spotted it. Abu Dhabi have done a great job here. They're going into the capital markets, yeah, which has been the preserve of the US since 1971. And they've managed to get one over. They've managed to move quicker, very, very quickly, looking at tax neutrality, liquidity, transaction speed. Yeah, it's not been lost by what's been going on. They've seen it in the US. And there was even some misinformation, as it happened to be late last week, about Trump as a family moving in to take significant ownerships of Binance US to try and take the sting out the tail, as Abu Dhabi works now to take advantage of US regulations around stablecoins. Very, very smart move. Very, very smart move. Over there in United Arab Emirates and all that part of the world, the center of the world, as they're starting to call it when it comes to this type of politics. So it's a multi-blockchain world, and we're very much now looking forward to Lightning being built across the Bitcoin network and stablecoins incoming at the same time. Now that I never thought I'd be saying that on a public call. That is just stuff that we've dreamt of as Bitcoin evangelists and Bitcoin owners. What's happening over there now is extraordinary. It's all about capital markets. So we're front running. We're putting ourselves right at the center of the money supply, just as I've explained before. Now on the peripheries, then you get the big moves coming from the OCC that are allowing banks, this is the US, allowing banks to custody Bitcoin on behalf of their customers. In other words, the banks are already spotting the fact that they can, just like they do now with usury, they can bring Bitcoin onto their balance sheets. And for the average Joe Soap, yeah, average six-pack Joe, he's not going to want to go into the sophistication that I've been talking about for the past 20 minutes. He's not going to want to go into self-custody. He's not wanting to go into all the complexities of self-sovereignty. Yeah, probably. But what they are going to do is want a piece of it. So they're going to start to set up little Bitcoin savings accounts. Going to have Bitcoin ISAs, all these types of things going on. That's just opened up now through the OCC. Yeah, our argument is, no, Mr. Joe Sixpack, take the time it takes for you to own self-custody. You know, don't trust the banks even when they're moving them. They're only self-interested. We know that. They're going to charge you through the nose for the privilege of them looking after your Bitcoin. And if you don't hold it, you don't own it. So make sure you're considering, if you're listening to this for the first time, getting the skills it takes to become self-custodian. Again, that's what DBM Academy is really all about, is self-custodian digital assets. Okay, so that's a strong footnote to be stated at that point. Now, Bitcoin currently going sideways. Lots of people kick and scream about this. All you've got to do is look at the last 4, 5, 6, 7, 8, 9 years to realize how lucky you are if you're managing an asset today worth whatever, $83,000. Yeah, and it might be going sideways, but why is it going sideways? That's the question. It's not about what's happening today. You don't price watch. You accumulate. In fact, you take advantage of dips and you accumulate your cash flows from other areas. Another benefit of having cash flow and yield, because you're able to build up some of that to acquire a stronger balance sheet. And you do that in the dips. You do that in the hardest times to make the decisions. Most people who are retail level, especially the new people, they get frightened to death in dips because they think the world's going to hell in a handcart. No, that's a great time because we know that's the movement of the market. That's just Bitcoin. That's just the way it is. Without the volatility, we don't get the benefits, right? So take advantage of low prices and just know that at the moment, the capital market controllers, the Abu Dhabis of this world as they're coming through now, are just manipulating the price. It's always happened like that. Yeah. The nation states need chance to get organized. And it's only happened over this past, 4 months that the big spotlight has gone on because the biggest economy in the world has now got its own Bitcoin acts coming through and strategic asset reserves coming through and everything else. A lot of the nation states are watching that and they just need a chance. So what they're doing, they're manipulating it to keep it down. But as soon as everything gets organized, there's only one way it can go. We've spoken about the M2 money supply. We've spoken about the over-the-counter OTC Bitcoin supply. It's very, very low now. So they can only go to open markets. That's exactly what we're anticipating. It's why we're prepared to sit and wait and be patient and work through it. Because we look at it on the highest levels, as I'm trying to explain here today. On the bigger side of the US assets are now on the move. They're on the move, okay, from corporate assets to technocratic assets. The SEC has now moved from Fed first, corporate, into technocrat. Now, we're not saying either one's as good or bad. I mean, you've got to be careful what you wish for, right? But it doesn't really matter to us as individuals because all that does is put more and more pressure on the demand side of the asset we're interested in. Therefore, it's price, therefore, it's more equity, therefore, we can put the equity to work, therefore, we can create more cash flows, and therefore, we can get ourselves ahead and stay ahead. But be careful of that. You know, the technocratic stuff is very interesting. Obviously, the technocrats are in charge now over in the US. Yeah. China's got its own version of that, where it has technocratic government, okay? An authoritarian government. It's not that much different in the US. The two models are not that much different, right, these days. So it's a case of just knowing that they're all at this anyway. So it doesn't really matter. The effect is the same on Bitcoin's price. To try and cast it into law, so we've got this for long term. You've got senators like Loomis there putting in the 2025 Bitcoin Act, which has now got stronger, obviously, since 2024 when she was a bit of an outlier. But now she's got lots and lots and lots of people driving this along, okay, whether it's for their own self-interest or whether it's because they understand this is for the benefit of their constituents. So you've got lots of mandates coming through. They want a fixed mandate of 200,000 Bitcoin per annum. Okay, going onto that Treasury acquisition balance sheet, which is quite extraordinary. Yeah, that undoubtedly will go through now, especially the nature of the way the US politics is currently balanced. And on top of all that, it's just worth remembering that Bitcoin doesn't need banks and governments. Okay, not like gold, not like stock, you know, not like the combination of fiscal experiments that have been taking place for the past 50 odd years. They've very much needed banks and governments, but Bitcoin doesn't need banks and governments. Banks and governments need Bitcoin. Think about that. Very, very, very profound. So we're out in the front seat, driving it as hard as we possibly can for all the reasons I've been talking about. So strategy, Mike Saylor's company. Just in the foothills here, there's some interesting politics going on if you read in the runestones behind all this, but they've got 500 million Bitcoin there or thereabouts already, strategy. Yeah, and he's just about, probably this next couple of weeks, about to put another $21 billion into Bitcoin. Yeah, very, very, very profound indeed. That basically means he's acquiring in one fell swoop there 1.5 years worth of Bitcoin supply. We know how much Bitcoin can be produced in a given time period. 21 billion constitutes, at today's prices, around 1.5 years of supply. Yeah. So what are they doing? Well, they're basically asset stripping the stock market. Now, if you listen to what's going on over with Besant and everybody else, they're prepared to take the pain. They need to take the medicine before they can get better. We've been talking about this for years at DBM. There needs to be some sort of, the only word I can think of is reset. It's not really a reset. because that's been happening slowly for many, many years. But what they're doing is they're giving a dose back to the stock market, which is heavily, heavily overinflated. We know about that with stock buybacks. But the whole idea is they're now looking to prepare for US nationalization, okay, of fundamental stock reserves. Yeah, which is interesting. And like I say, it's totally what China do already, arguably Russia as well. Yet the US are doing it more on a technocratic business level, whereas the Chinese do it on a political level. But it's actually the same thing. Yeah. So you'll see now a couple of scenarios. You'll either see Bitcoin break away, which is what my estimations it will do with regards to stock pricing, or you'll see another dump in Bitcoin as it corrects itself in line with whatever's coming next. But I think that'll be overburdened by the likes of Abu Dhabi and bigger companies who are looking for capital markets, countries, sorry, who are looking for capital markets, who want to drive this forward. All right. So again, whichever way you look at this from an individual's point of view, whatever the shenanigans are of political brinkmanship, because of the global interconnected nature of Bitcoin, plus the retail sector, of course, who will always buy in when they think something's quick and easy, like we saw back in November. So we've got all those demand side that keeps us moving. And all we do as business people using Bitcoin on our balance sheet, so we just collateralize at the right time. The skill, of course, is what you do with that collateral, which is why we're always working to find ways to create yield. One of the ways that we're very, very close to looking at right now is the emergence of bit bonds, which we've done forever ourselves anyway. If you've been watching any level of communication we've been talking about over the last decade at DBM, it's all about convert your mortgage onto Bitcoin. Pay off your mortgage through Bitcoin. Collateralize Bitcoin, pay off your mortgage faster. That's as good as a bit bond. Yeah, you're just refinancing through the global network. It's a real privilege if you manage to do that. Well done. And then last but not least, as I said, gold hits $3,000. You got people like, what's he called? Peter Schiff getting all excited about the apex predator being gold. $3,000 a coin, an ounce. It's taken it years to get there. Bitcoin was doing that in its sleep 10 years ago. You know, I don't know where this guy gets off, but that's just the way he is. Obviously, he's trying to flog his business, right? But the whole idea is that having $3,000 an ounce is a great thing in the big scheme of what we're talking about with regards to preservation of purchasing power. So in the end, it all comes down to M2 money supply. Keep an eye on that. Keep an eye on Bitcoin reserves. Keep an eye on OTC. Keep an eye on exchange reserves. And now we've got global demand through the capital markets. Keep an eye on Abu Dhabi. Except the EU, I've put in there. They're still not quite getting it in the EU. Doesn't matter if we live in the EU. Doesn't really matter, because at the end of the day, it's a globally interconnected asset that gets its price driven by smarter parts of the world than the ECB can possibly muster. Those people need to go, frankly. That's just the way it needs to be. So that's on a macro level. When it comes to what's going on the political level, okay, so neopolitics and geopolitics, then it's also equally profound where we find ourselves. And you've got a real mixture of opinion here. You've got a real mixture of emotion going on here. But at the end of the day, most ordinary, normal people like to live in safe, warm, secure, well-fed, well-nourished, healthy societies. That's what we want. Now, the fact that that's never happened in human history, because the nature of the way the humans work, is a moot point. But, those of us who do live in calmer parts of the world, yet those calmer parts of the world are using their bullying and self-interested natures to continue wars, then at some point the people have got to stand up and say, I live in this society that's very calm and collected, thank you very much, but you're using my tax dollars to perpetuate war. Now, obviously, this has gone on with silos of people, protesting about this over many, many decades, certainly all my life. But there seems to be a sense at the moment that people are getting more sophisticated in understanding that what we want are hash races, not arms races. Now, the vast population won't understand what that means. But as we now see balancing going out between East and West, all the things I've been talking about there, between Russia, China, and the US, all centered around Abu Dhabi, by the way, at the moment, then you start to see that people are realizing that it's actually much safer for society to focus on who's going to own the most Bitcoin, the center of the money supply, than have to keep funding the military complex. It's not a military complex we want, it's a Bitcoin complex. And if that can be done on sovereign wealth funds, then everybody can take, in theory at least, a little piece of benefit from that, rather than perpetually funding the weapons companies with these pseudo wars. So, just my opinion, but it's an interesting angle to look at as we move into this next couple of decades. So, as a reaction to the US activity, the US activity is pretty profound. They've exported now the weapons network, the proof of weapons network, to Europe. The Europe currency is obviously built on the dollar, so it doesn't make any difference to the US. They're going to carry on doing what they do in terms of their currency, but they've definitely now put the onus over on Europe to somehow create an ability for it to defend itself in pseudo wars. Now, there's no question that countries need defense contracts. Of course they do. That's just the way it is. But to export the problem and then go off and concentrate on AI and concentrate on blockchain and concentrate on oil deals, which is exactly what's happening right now in front of our faces, the Europeans are so and the Canadians are too focused on keeping going with pseudo war mongering, whereas the Americans and Russians and Chinese, mainly through the BRICS, are now more focused on the rebalancing of prices of oil, etc., to set up trade deals to pull the rug from Europe. 100% pull the rug from Europe. And because Europe's not got a leader, it's just a bureaucracy of people running around trying to follow old-fashioned ideas, they're going to find themselves on the back foot. Okay, so this is happening right in front of our eyes. Again, does it matter for us as individuals who understand money supply and big picture? No, because we own the center of the money supply, as things are now shaking out into the way we've always wanted them to do. But obviously, it's not going to be a straight line. There's going to be challenges with that. But if you own Bitcoin, you're not going to be too far off. So we'll find out. Now, these sanctions are quite interesting for us is in our community because we've been affected by these sanctions. We've very much been affected. So we may be biased, we may be wishful thinking that somehow there's going to be an adult conversation between Trump and Putin this week, whereby they are going to get down to it. But the more you look at this, the more you actually really look at it and get away from the mass media and study it in terms of what's actually being said in real, media meetings and real press meetings, whether it be from the Russians, the Chinese, or the US, or Europe, if you can stand it, then you're able to see what's really going on here. They're obviously resetting the oil price to get back to the cheap energy we need in order to prosper and thrive, always taking into account some level of environmental consideration, of course, but not using that to browbeat people into thinking that they need these certain levels of taxation and sanction in order for the world to function. That, I think, is being unraveled very quickly, and it's showing up now. What was always the case, as those of us who've studied it understand where the Ukraine war actually stemmed from. Okay, so obviously both sides need to behave themselves. We understand that, but there's no question that the trade side of it will now take front stage as opposed to the military complex. That has a net beneficial effect to us. Okay, because the sanctions need to be uplifted. Why? Well, not only because of what I've just said, but also the defunct. Because what have Russia been doing for the past 3 years behind the scenes? They've been trading gas and oil through Bitcoin, Ethereum, and USDT. So they've completely sidestepped the sanctions. How do we know that? Well, because the Russian debt to GDP is 22%. What's the debt to GDP in Europe? What's the debt to GDP in China? What's the debt to GDP in US? So in essence, if there was a fight to be had, the covert wars, the covert finance, it's Russia's won. Russia's won, not that there needs to be a winner. People simply need to get back to normal adult discourse, and the world will be a better place. The big winners of that, of course, are also the BRICS. And the BRICS have threatened that they just don't need the US dollar anymore. So US are doing everything they possibly can, not just to threaten them with more sanctions and obviously tariffs, or mainly tariffs. The US have suddenly woken up, figuring out that they need to get a grip of what it takes to own the center of the money supply, which is Bitcoin. So everything's connected together, and our hope is over this next few months, the sanctions will dissolve, we can get back to normal trade discourse, we can get back to where certainly we want to be in terms of driving our next yielding platforms and moving into a more positive future overall, and certainly with less people dying. Thank you very much. That'd be nice as well. In the meantime, the ECB sat behind the scenes, saber rattling about their central bank digital currency. Can you believe it? I mean, you couldn't be more off if you wanted to be. They're totally off beat. Yeah, because they're leaderless, because it's a bunch of bureaucrats, in my opinion, that are just simply trying to hold the status quo in the only way they know. They're not looking or even choosing to look. They're not looking for advisors and professionals the way the US has to get in front of where the world's headed. They've just not done that from what I can tell. From what I can tell. And moreover, they're just adopting the proof of weapons network from the US. And who will be the victims of that? The middle-class taxpayers of Europe. How do you avoid that as a European? You own Bitcoin. So the exit plans are there. We understand completely how to get around all this, but it's just mind-boggling to watch what these people are doing without any regard to what is best for the good of their societies, whether it be fighting wars or whether it be CBDCs. You know, both those are oppressive, and both those lead to nothing but weakness and fear. Whereas if you go the other way and start to look at sovereign wealth funds and how to give everybody a little piece of ownership of their money supply, and everybody takes a little piece, then that's a positive thing. Until it's not, of course, but it gets you to where you need to be, at least for people to be more engaged. So bosses, banks and governments are hedging this in any case in all jurisdictions. And for the first time, they're owning Bitcoin to protect themselves as the center of the money supply. That's as institutions, that's as governments, obviously, and companies. What do? Well, we just do it quicker than them. We do it further forward than they do it, as we've been doing for most of the last decade. So it's all unraveling in front of our eyes, and there's all sorts of consequences and things we have to take into account of and move forward sensibly, and most of all, have the fortitude to work through what is now interconnected global politics with decisions that we've been making over the past decade. So own the money supply, stay strong, and you'll be absolutely fine. You're stronger together. So again, to reiterate, if you want to understand how we understand this, we do all this full time, don't forget. So we're able to see this level of detail every single week, which means you don't have to. And it means you can listen to a call like this and then go and get your practical help on how you're going to take it to the next stage. Okay, so hopefully that was useful. See you on the next call.